there's going to be a lot of shit going on. Okay, you're going to see a lot of craziness, and it happens quickly. The housing market does not go into recession this fast. It doesn't happen with unless you have something crazy happen. This is crazy. This is unprecedented. Just like you're spending $11 trillion, you were behind the curve. Now you're trying to get ahead of the curve. You're going to see these massive swings. With that said, talk about some of the things that you've been doing, because I thought that it was awesome. We talked about this offline. Let's bring it, because people are probably like, how do we invest in this type of market?
Right. And so you must pay attention to things like this, because it, as Frank said, it's basically the Wizard of Oz behind the curtain. However, don't let that scare you to the point where you're on the sidelines. And I was doing some screens the other day, Frank, and I was looking at stocks. There's a couple of caveats here, because there's a lot of acquisition companies and kind of just holding companies that can mislead this. But I wanted to go over a list with you and see if you're surprised or not shocked about this. And this is just a easy shopping list for all investors out there. And warning, this is going to be boring, but the big takeaway here is to focus on great businesses and no matter what economic conditions, because the odds of you making money are good. Frank, if you look at companies that are within 5% of their 52-week highs, their market cap is at least $400 million. I just limited to major U.S. exchanges, because you can get a lot of overseas listings and things like that. Not that they're bad, just keeping things simple. And the only other thing I added to this screen was in the last 12 months, you had basic EPS, earnings per share, excluding items. I know that's a little bit of a gray area. Won't get into that, of at least 10 cents, because I didn't want a lot of growth companies and all that. Here are companies, Frank, trading below or within 5% of their 52-week highs. And now remember, why am I pointing this out? Because we've gone from 20 to 30% down to a rally of the S&P rallied 16% off its lows recently. Yeah, and then we go down 2% in a day to start the week. So one of the best well-run companies we've talked, AutoZone, is on there. That probably doesn't surprise you. Northrop Grumman.
Defense, yeah.
Defense, that doesn't shock you either.
No.
Humana, remember Humana's our old favorite? I think I talked you into selling that, and that was a mistake.
No,
that thing is amazing. That
crashed and stayed low. I think we bought it, I wanted to say at 250, and it was up to 400, and it fell. It fell and stayed there. And even so, when COVID really, the rebound in COVID, it was one of the stocks I looked at, never came back. But now, I don't know, I haven't looked at the past few months.
Yeah, it's been
great. So healthcare,
a lot of energy companies, Murphy, Chesapeake, CHK, oil and gas. Occidental Petroleum, we know Buffett is now going past 20%, filed to get 50%.
Oil companies are interesting, right? Because we saw oil at 130 and then fall a little bit below 90. It's, 93, 94, still near the low end of the trend. But we've seen an incredible rebound in oil stocks, right? You can't deny that.
I don't know if you have charts up, but Devon Energy is, I think its recent highs were around $80 a share, if memory serves me correct. It's still well off, but like ExxonMobil, it's 6-7% off its recent highs, and oil is 95 instead of 130. Yeah, I mean, oil stocks are doing very well, even as
Devon has come back. I'm going to put up a chart here for you guys to see if you're on a YouTube channel.
Was it 80? Am I way off with recent highs around 80?
No, you're not off. It was pretty close to 80. Okay. The highs like 70.
But it fell to like 50, didn't it?
So it fell. This is only a 6-month chart. Wow. So in 6 months, let's go back to March. It was 55 in March. Popped in, this is June, to close to 80. And this is June 8th. And then when you look just less than a month later, it was 50. Holy cow. And now it's back up to 71.
Yeah.
I mean, these, holy cow, you go
and
back
Exxon
further.
is the same way, not near as volatile, but ExxonMobil is, I think, 7% below its recent highs. Again, though, when you look at, even if you bought at the highs and oil tanks, yeah, it's painful for a short time, but those are coming back and the fundamentals are still there.
Yeah.
Another one, Casey's General Stores. You ever been to a Casey's General Store, Frank?
No.
They're spread out in the Midwest, which I am a favor of because I'm from there. I've not ever been one, but it's doing great. They sell pizza. It's like a, gas station looking place.
$8 billion market cap. Wow.
They have like 2,400 stores. Are you on Casey?
Yeah.
I think they have 2,400 locations.
A share. I could see why no one hears of it. So.
What is it?
People hate buying stocks. They think that if they buy a stock at $218, they have less of a chance to make more money if it's a dollar stock, but it's all about percentages.
Exactly.
One goes up 20%, the other goes up 20%. It's fine, but I can't buy. It's too expensive to buy the $218 stock. That's okay though.
Do any of these stocks shock you? McDonald's, Pepsi, Campbell's Soup, Hershey's.
No, because especially McDonald's, Pepsi, no, that doesn't. That's
C.H. Robinson Worldwide.
Too, if you look at McDonald's too, it's. I mean, McDonald's is just look, when you're in a recession, people are going to go to McDonald's, right? So that doesn't surprise me.
I was surprised about C.H. Robinson, great trucking company. Mm-hmm. We've done Knight Swift in the past, just because at first thought, hey, trucking is going crazy. You had this huge supply chain crunch. You had a lot of people doing that, but then you have a lot higher costs with wages and oil. I was actually surprised to see that still up there. The main takeaway here is we can go on and on and on. Waste management, that probably doesn't shock you. Yep. The point is that these are great businesses. And yeah, in the last 3 months, you've seen extreme volatility. But the point is, I'm not saying put your head in the sand and I'm a permeable. But the point is, when we talk about meme stocks, AMC, we have fun with that. But that's not investing. That's just simply gambling. And I think you'd agree with me, Frank. If you want to gamble, you should go to Vegas. You can have a hell of a lot more time and a lot better scenery. So if you want to gamble in the stocks, you can. That's fine. But this just proves that as long as you are not going to be trading, you can buy great, well-run companies like this. And for a 3-month period, and even seeing crazy market moves, the odds are still well in your favor to hold on to these stocks because these are investments. You are investing in great businesses with solid management teams that actually make money, that provide goods and services to people. Yeah, they may fluctuate with macroeconomics, but there's 250 to 300 names I could go over on this.
It is waste management too. You're looking at a year out, just you got a little volatility from 170 to 140, but this thing was 140 just for those traders out there, the people who, it was 140 June 20th, and now it's 173. And it was, just a lot of volatility with these names because the market's all over the place. You're going to see this even in big names, especially small names, guys.
Absolutely.
The volatility right now with the Fed, no clue what the hell they're doing. They're catching up, and they want to catch up to the point where they're trying. They're trying to raise rates more aggressively than almost any time in the history of this country. And they're like, but we're cool. We're not going to see a recession, though. We're going to be fine. I'm like, these guys have no clue. I understand the message. I understand you don't want to create panic, right? And you don't, but just being so wrong on the other end and having to catch up right now, it's just for anyone out there, you're looking at the Fed going, holy shit. I wasn't worried, but now I'm a little worried that they're going to really push past 3.5%. And I think, you're already seeing the effects of it and just demand is falling off a cliff. And you got to talk to people. And guys, if you're not seeing, I'm not seeing in certain industries, say Phil Bo just went on and said how autos, they just see massive orders. These are orders, I placed orders for $100, $200 for EVs and stuff like that. These guys have massive amount of EVs that are now 25%, 30% more expensive. And those prices are going higher. And don't worry about whatever just passing the inflation reduction bill. We're going to spend more money. Inflation reduction bill, right? So they're increasing the amount of tax credits, but already Ford, GM already raised prices. They're expecting to place on these prices in the next month or two, just to account for those. So the expenses. And if Ford comes out and says we can't make money on EVs right now, and you're just spending $50 billion over the next few years to go all in EVs. You better hope there's freaking demand. And it's not going to come if we're in a recession. I don't give a shit who you are. It's not going to come. I know that, believe me, I'm in the market for cars, and I had to buy a car that was fully loaded, that half the stuff I didn't want, or I wasn't getting the car, right? There's nothing on the lots. I get it. I'm in the industry. I understand. But holy cow, you think people are going to pay that much more? And I know EVs are the future and stuff like that, and I get it, but man, I could see them purchasing the gas guzzling vehicles and just saying, okay, I'm going to do this instead of the whole learning curve or whatever. But it was worth it. But now with the prices skyrocketing, it's just, I don't know. I don't see the demand that they're seeing based on $200, putting $200 down, $300, maybe $1,000 down on the car that you were going to buy for $45,000 that was supposed to be available a year ago. And now it's not even available yet, but now that car is $66,000, some of these things. That's how much it went from 45 to 50, 55. The prices are unbelievable, and they keep going higher and higher. So you're going to see demand fall off. I want to hear from you guys, frankcurzonresearch.com, because a lot of people here, and it's not just here. I'm hearing from people in Europe that listen to this podcast. I'm hearing from people in China, the podcast in the past few months. But they're just saying immediately, like everything was booming, and holy shit, it was like a light switch, and it just got turned off. That's what you're going to see. I don't know if the Fed gets that, Daniel. I don't think they do. I don't think they see real people or look at it in that terms. I think they're all looking at data that is usually lagging, and they're going to maybe focus on that. But holy cow, I'm just worried that they're going to get a little out of control.
Yeah, well, of course they will. Last one here. This is kind of fun. I can't resist myself, Frank. You think H&R Block is near a 52-week high because the 80,000 IRS agents coming to look for us?
Maybe. Maybe. But then again, those guys, I'm
sorry,
you know what? Those guys, yeah, I know. But the IRS agents aren't targeting the people that go to H&R Block. So I can tell you that right now.
Well, I'm saying people are going to go to tax services because now they don't want to do it themselves because now that, you got to have somebody hide behind.
Well, I mean, they're hiring like big accountants. That's the people that they're going after, where all those loopholes and stuff like that. And it's they're going after like the high end, middle class, and high end, and all loopholes that are. And there's so many loopholes because of the government, because of the way it is. I love it. Yeah, I gotta.
Oh, see, I got you. See,
I gotta give Donald Trump some credit here. I love when he said this because he was on stage and they were saying, "Well, look at you and your businesses, and you take advantage of it." And he goes, "Yes, I'm taking advantage of the laws that you guys created. I'm a businessman. That's what I do." And he goes, "That's how I know how to change them because I know every loophole."
Yep.
And I appreciated that because he's like, if you own a business, that's kind of what you're supposed to do. You're doing it legally, right? So you get the best freaking tax people, tax accountants, everything. And it's going to be interesting that I think there's 75,000, and now you're going to have another 82,000 on top of it. By the way, I think they're armed now. They're armed a lot of shoot people.
Oh yeah, that's crazy. The job description. Holy hell!
What country?
To your point, I listened to a great guy. I know his name and I can't think of it right now, and I apologize. But I listened to. He just made the most simplest point when it came to taxes, and he said, "Listen, the tax code is essentially a roadmap or a treasure map. They tell you what they will give you the biggest discounts on and things like that. You just have to follow it." Mm-hmm. And I remember that guy, big CPA, I just remember thinking, wow, that is the most wonderful, simplistic way to look at taxes instead of just dreading it and hating it and worrying about it like all of us do. And that's why a lot of people do real estate and different things. And anyway, when you look at it like that, hey, this is what they tell you to do and how to manage things and what big write-offs you get. So anyway, I had to have some fun with that.
The write-offs that you got to get with solar.
I was surprised. Hell, we're past tax season. I know people got to do quarterly and all that, but I was surprised to see H&R Block up there. You have a lot of utilities and things like that. The big takeaway here is, people, we are in an environment where you want to be boring, and the easy money is just growth to the moon is over as long as the Fed is going to raise rates or rates stay high. Yep. So keep that in the back of your mind, but do not defer to just sitting on the sidelines, because as we've just gone through a handful of great companies, well-run companies, they're doing very well even amidst all the economic uncertainty.
A good job on that, Dan, because you don't realize that when you're watching TV, right? When you watch, it's just like, holy cow. I mean, right now, the rise of TikTok,
all they do is talk about Apple and Microsoft.
The fall. Then they're talking about Jackson Hole. Like, everything is like just conditioning you. Remember, these are daily services, and even when there's no news, they got to give you news. And now there's not really earnings season, there's not a lot of news. They just, we're not really used to talking about Jackson Hole 3-4 days before it happens. But it's constantly filtered, and what you're going to pay attention to is the shit that fears you the most. And when you turn this stuff off, and you wouldn't know that many companies are doing that well, that are just, especially with the ups and downs of the market, especially with the recent downturn in the past 3 days. Again, it seems like the markets are down 10-15% in the past 3 days, doesn't it? It feels like it's a lot more than that.
Yeah, absolutely.
Like, what if the S&P 500 didn't break through its 200-day moving average? It came within the handle. Guys, if you're looking at that data, that rarely ever happens with the S&P 500. But there was great data, and this is done by a guy at Jefferies, and he showed that when that happens and you come off, the gains over the next 3 months and 6 months are pretty significant. You would think that's crazy. It came off, now it's going to crash. But just you got to look at the data. You can't just listen to anybody and say, holy shit, technicals, it hit the 200, it came right off. That's a negative side, and we're going to crash. If you're looking at the data when that happened, the next 3 months and 6 month period, the S&P usually breaks through that and does well. So I'm not saying it's going to happen. I'm just saying, there's two sides to every story. It depends who you want to listen to. And